Oh, I see.
Every time I come back to you, like tonight. They told I
Yeah. Hello, everyone. I'm Joe. Today, I'm excited to be here to dive into a increasing topic, which is private lending. So today we will go through some case studies, and also we will go through what kind of documents you need to prepare before you submit a private deal to your senior agents or directly to the brokerage. And also I will briefly discuss what's happening right now in the private lending industry, and also why people need a private mortgage. So back to a few years ago, 2020, 2021, at that time, the interest rate is kind of low. If people get a mortgage, for fixed 3-year term, roughly is something around 2%. However, after 3 years, they need to renew. The mortgage right now for fixed 3-year term, the interest rate is something around 5.5% or a little bit lower, right? But it's still doubled or even tripled than their previous interest payments. So if the borrower's income is still the same, if they want to renew the mortgage, how can they afford the double or triple interest payments? So some of them might choose to hold the property because they hope the interest rate will goes down in next 1 year or half year, right? So they go to a private mortgage, try to have a bridge loan for half year or 1 year, and then go back to the bank to refinance it. And some of the people, when the interest rate goes up, they already realize I cannot afford the mortgage anymore. So what they can do is they trying to sell their properties, but currently the real estate market in the whole Ontario area is not quite good. Most of them cannot sell their property as their expected price, so they choose to wait a little bit longer period to see the market feedback. So they go to a private mortgage again and try to sell their property in a good price. And that's the reason why people need a private mortgage, right? And also, as other people mentioned, they purchase a new assignment, new properties, they need to closing. And right now, the traditional bank reduce the mortgage amounts, so they need to have something like a second mortgage to fill the gap. So people need a private mortgage. And one thing I need to mention here is right now, the private mortgage demand is so high, and there are only, kind of less lenders in whole Ontario, even in whole Canada. So most of the lender prefer to choose, the best deal they have to lend the money to the borrower. Instead, they focus on one, just, doing all the research and try to choosing the document back and forth. So if we give a private mortgage deal to the lenders, and most of them require you to fill up something like an application form or at least a deal summary. In that case, they will have enough information to identify if this deal they like it or not, and also they can say other like borrowers information and also their party information, right? So we will go through this application, what the lender is looking for. So we have a Kingsdale mortgage application. Some of you might see it, some of you might not see it. So we will send out this Kingsdale mortgage application package to everyone after the meeting is finished. So the first page is basically a deal summary. It's basically you need to ask your client to fill out. So when the lender review it, they will know what's your client's name, what's your client, background information, like how much income they make per year, and do they have any investment return? So, and are they paying the mortgage? Are they paying the property tax on time? Are they have a good standing in their mortgage, right? Something like that. Also, they want to have more information about the borrower's properties. So the property address is mandatory to have, right? And also they want to know is a condo or a townhouse or freehold or even some commercial, properties, right? And then they want to know the estimate value or appraisal value from our brokerage side. So some of the borrowers, they just purchase the properties and they already do the appraisal report. So they might just directly give you the appraisal report. So we will, as use the appraisal report estimate value as a reference. And also we will have our own underwriting department to estimate the value. Because nowadays, the appraisal report value sometimes may not accepted by the private lender because some of the appraisal guy, they will use some, higher sold history price in the surrounding area as a reference, to have the final estimate value of the properties. And meanwhile, the private lender wants to know, is this properties owner occupied or this is an investment property? Why this question is so important? Because if the owner occupies there, they will think this deal is much secured because it's an investment property. No, the owner not live there. Even they cannot pay for the mortgage and the lender doing the power of sale, right? So some of the property owners, they don't really care, right? So they just said, let's do the power of sale. I don't really care. It's investment property anymore, right? And also, except those things, one thing they really needed from the borrower side is they want to have the exit strategy. What is the exit strategy is what are the clients plan on paying out the mortgage because this is a private mortgage. Most of the private mortgage from the private lender or the mix, the borrower only needs to pay the interest payment. That's the most, big difference between the, traditional banks and the private lending. So after you paying the interest payment and after 1 year, if you need to renew the mortgage or if the lender doesn't want to renew the mortgage, you need to pay the full amount back to the lender, right? Because they have a line on your property. You need to pay out your mortgage. What you need to do, some of the people, as I mentioned, some of the people, they said, okay, I will pay for the full amount from my pocket and I will go to the bank to, get the first mortgage with a traditional bank with a lower interest rate, right? And some of the people said, I believe I can sell my property within a year. So once I sell my property, I will pay out the mortgage. So those information lenders needs to know in advance because if you are trying to sell your properties, although you are signing a 1 year, something like a 1 year mortgage contract with a lender, but those borrower might request to, pay out in advance without, too much penalties, right? So this form is pretty important for all the lenders. And also the notes is, you want to, illustrate or describe more things about the borrower, right? And lets the lender know more details. So normally we will put on the notes is regarding the townhouse or the house stuff. Because for the condo, most of the condo are having the same interior design. But for the townhouse and the freehold, at least lots of townhouse and freehold basements is totally different because when you purchase a new built townhouse or freeholds, the most likely they will give you an unfinished basement. So if your client's property, the basement is finished and they spend like 100,000, 150,000 to do the renovation, right? You need to mention here because the estimate value would add the basement value into it, and also for the property for the condo, normally you don't need to write too much detail. If you have a floor plan, that would be great. Attach it and send to the lender at one shot, right? But for the freehold and the townhouse, the estimate value combined with two parts. The first part is the house value. For example, you have a 4,000 square feet house. The value will be different than a 3,000 square feet house, right? And also, the estimate value, another part is the land value. If you have a 4,000 square feet land, right? It's totally different than you have a 6,000 square feet lot size, right? So it's totally different. So you need to mention as much detail as you can. Although most of the lenders, they have the access to, and their underwriting department will do the research by themselves, right? But if you can mention as much as you can, it saves your time because most of the private deals, the borrower needs the funds ASAP. They will not wait, say, I need the funds next month. Most likely they will say, I need the funds within 3 days. How can we have the funds ready in 3 days? We must do the enough preparation. We must have all the documents ready before we send to the lender. So after the lender reviews, they will give us the feedbacks within 24 to 48 hours so we can finalize the deal. Except the first page, a lot of lenders also wants to know as much as detail, about the borrowers. So they want to know the borrower is married or not, and also know, where this borrower live currently, right? And they want to know how many years they work for their, employer, and also they want to know how much cash they save in their bank, and how much property they have, how much any other assets they have, right? So this form basically include everything. So if your client can fill out this form and send it together, that would be much great, right? And also you can put here, the purpose of the mortgage, right? Some of the people, they need to, refinance. Some of the people, they need a pre-approved mortgage to closing the property, right? Or refinance or new purchase, right? You can mention here. And this is a consent form. It's basically everyone is understanding what they are doing right now, right? If they understand what's information we're collecting and what information they need to provide, they signed here, right? And the last page is the property description. As I mentioned, some of the people, they might have several properties already, and the one they submitting the application in investment property. So a lot of lender also needs to know where is their other properties and how much mortgage they have with other bank or with other lenders, and what's a roughly, what's a roughly rental income or the tax and other things, right? So they want to know as much as they can, because right now, most of the traditional bank and private lender, they are trying to reduce the loan amount in order to avoid the risk, right? So that's what's basically they require. Except this document, you also need to request few things from the borrower. Two things is very important and is also mandatory to have. Is first things is a credit report. The lender needs to know the credit score for this borrower, and also they want to check if this borrower, missed any payment or other things in the past years, right? And the second thing they need to have is the IDs. So you need to have a copy of at least driver license for your borrower and send application form, credit score, and IDs to us. If this is a new purchase, please send all the relevant documents like APS or amendment, all the files in one folder and send to our brokerage or send to your senior agent to deal with it. Because right now, even they didn't require you to send those documents, but later on, before they release the commitment letter, they will request the documents. So we need to do the preparation in advance. And after we illustrate the importance of the application form, I will go through several case study to show you guys the whole process of how we get a mortgage for our client and for different kind of party like condominium and a freehold and the party within GTA or out of GTA. So firstly, let's go to the first case study. The first case study is basically a condo apartment located in North York, unit 3205 11 Bogart Avenue. So it's a residential party for sure. And as the borrower, fill out the form, they said this is a new purchase within half year, and they sent the APS together. And right now, they are trying to refinance. They request the loan amount is 630,000 for the first mortgage, and the price they purchase is 850. And the first mortgage balance right now, they didn't write it, but later on, if you already have the first mortgage or you have the second mortgage at the same time, whatever you want to replace the second or replace the both together, you must ask your client to provide the first mortgage or second mortgage statement to you, because the private lender needs to check how much mortgage balance left, and also they can ask their lawyer to check if their client paying the mortgage on time or not, right? And the loan to value, which is LTV, I will illustrate this part a little bit later. And also, the board already done. The purpose of the funds is purchase a property, but for this case, actually is refinance because they already closing a deal half year ago. Right now, they're just seeking to find another source to, renew the, half year mortgage. That's it. And also, we know it is owner occupied, right? For the confidential issue, we delayed the borrower's income, those stuff, but you need to ask your client to fill out their income or fill out what's the investment return they can get for a year, right? And then your borrower must to fill out if they have a mortgage with other, lender before. They must mention if they miss any payment or not. And if they miss any payment, they need to mention how many payments they missed, right? And also they need to mention, are they paying the tax up to date for the property tax and other tax, right? And if they didn't pay the tax up to date, they need to mention it. What's the outstanding property tax amount, right? And then the most important, very important part here is the exit strategy. Your client needs to tell you or tell the lender what's their plan, right? Are they trying to wait for half year or 3 months or 1 year to, going back to the conventional banks to get the lower rate, or they want to sell the property, right? For this case, they already mentioned. So they want to get the first mortgage with a lender in next 3 months, and because the client has very good credit, right? So for this case, these clients already done, they want to get a mortgage with other lender in next 3 months. So they might request they pay out the mortgage in advance. For those terms, some of the lenders they allow, some of the lender is restrict to give the mortgage at least 1 year. So it really depends on the lender, right? So we can always try for your client, but we need to, see the results from the lender side or the MIC side, right? And for this deal, since it's a condo apartment, there is no improvements in the units, so the borrower didn't mention anything. Yes. And then the deal sent to our brokerage, we receive it, and this page is prepared by our underwriting department. So firstly, our underwriting department needs to make sure the borrower name, is same as the title, the owner name for this property, right? When we, search it, we find out the borrower name is same as the owner name, and also the last sale price shows on the government website is 850, which match thousand, which match the APS number, right? And we search it, this property is approximately 900 to 999 square feet. It's a 2-bedroom and 2-washroom unit. So next step, our underwriting departments, they will search the current listing units on the market and recent sale history, shows on the market in the TRAP system. The TRAP system is Toronto Real Estate Board system. Basically, it's all the accurate, numbers shows on the website. So we can easily find out currently there is a property, $959,000 for unit 808 in the same building listed on the property. Although the size is a little bit smaller than the borrower's unit, but for the condo, we can always count the square foot price, right? Because when you purchase a new assignments, you're always purchasing, based on its square feet, right? Per square feet price. And so for this one, the current listing price is 957 square feet. And this previously I believe they mentioned this is an offer presentation for this listing. What this offer presentation means, so they list it in a lower price, try to have more people interested and more people competitive in the same building, so for the same unit, so the final price will be higher, right? So this is a selling strategy for some realtors. And another one on the market, which is a unit 904. The size is quite small. Is based on the floor plan is 611 square feet. If we calculate the price, the asking price is something close to 1100 per square feet. So this is a current listing price, but more oftenly we use the recent sale history as a reference. So in the same building, there is a unit 1203 sold in last year, almost same timing when the borrower purchased the property, right? The sold price is $952,000, and the area is the size of the units is between 900 to 999 square feet. The size or the number of bedroom or the number of washroom is totally same and always one parking spot. So we can easily find out for this property per square feet, the price is something around at least 1,000 square feet, right? And there is another one, it's a smaller unit 2609. And the sold price in August 6, 2023 is 920. Even we count the unit size for 900 square feet, so the average per square feet price is still above 1,000 square feet. So since this unit based on the floor plan and shows on the government website, it's at least 900 square feet. So let's get the minimum value. So the minimum value of this property is $900,000. So we got the estimate value. So we put it back to here. We put it back to the estimate value here, and then we need to calculate the loan to value. The loan to value is very easy to calculate. Once you have the estimate value, you only need to use the request loan amount divided by the estimate value, and you will get the loan to value. So $600,000 $30,000 divided by 900,000. So the loan to value will be 70. So that's the final documents we organized and sent to the lender. In some case, your client might have an appraisal report. If our underwriting department gets, a similar number as shows on the appraisal report, we will use the appraisal report number and page to the private lender to get the mortgage your client wants. And this is for a GTA area deal and also for a condo deal example. And then our second case study will be a detached house and out of GTA area, we will see the difference between a property within GTA and a property out of GTA, and also the difference between a house and a condo unit. So for this client, she has a properties in Innisfield located in 1340 Blackmore Street. So for this property, it shows it's a detached house, and they already write estimate value here is 1.2 million. So here they need 130,000 to 150,000 for the second mortgage. So this is a second mortgage instead of the first mortgage, right? So we must know there is a first mortgage, right? So they mentioned their first mortgage balance is $620,000. So in this case, since they already have the first mortgage, so you need to request the first mortgage statement and send everything in one package to our brokerage, right? And when they purchase the property, the purchase price is $725,000, and the loan to value they mentioned here is 75%, and the owner occupied here. The borrower income is $800,000 for the investment, right? So and they pay the mortgage up to date, and there is no payment missing, and they also pay the tax up to date. So they illustrate here why they need the second mortgage. This second mortgage is not for the bridge loan, it's not for the renovation, it's for the education. So the borrower wants to get this money to go to the school, I believe, to become a pilot, right? So they need to pay expensive, tuition fee, right? So they want to get some mortgage from the private lender in order to go to the school, right? And they mentioned their money right now is holding in the investment and will be paid out the mortgage after half year. So that shows how the borrower exits, right? How they paying out the mortgage if the mortgage is approved. And lastly, in the notes they mentioned this property, the basement is finished. As I mentioned, if the basement is finished, the estimated value of the property should be higher than the same property the basement is not finished, right? So let's go to how we underwriting this deal. So we check the owner's name, and it's same as the borrower's name, and we find out the lot area for this property is 4,300 something, right? And it's a 126 feet times 35 feet lots, roughly around that number. And this is a new build assignment. Actually, they purchased in 2019, just got the property half year ago. So the purchase price is 700 something. So we can see here is two active listing on the market. One is 1352 Blackmore Street. Actually, it's a neighbor. So the asking price here is close to 1.1 million. And for this one, is finished. The basement is part of finished. So, and another one is 2045 Ellison Street in the same area. The listed price is also close to the 1.1 million. And we check it. The lot size for the first one, 352 Blackmore Street. The lot size is smaller, actually smaller than the borrower lot size. And another one is still smaller than the borrower's lot size. So maybe here we can guess it. So the price for the borrower, party is worth more than 1.1, right? However, when we check the recent sales history, right, it provides us more comparables. So we find out actually there are two neighbors sold the properties within half year, And one party, they sold the price is 1.02 million, and another one is close to 1 million, right? And the lot size actually is a little bit larger than the borrower's one, right? Although for those two parties, we find out the basement is only part of finish it. So if we estimate the value of the borrower's property, we need to add additional money into the estimate value. So why here the estimate value for the borrower property is only 1 million? The reason is pretty simple. Because the lenders and also a lot of mix they mentioned, they prefer the deal within GTA area. If the deal is out of GTA area, they will think it's a little bit risk. They will reduce the loan amount, or they will reduce the estimate value in order to keep them in a safe side. So even this property, the basement is finished, but the estimate value provided by the private lender side finally is only 1 million. It's due to its in Innisfield, it's out of GTA area. I can provide you some data is during past half year, the transaction happened in Toronto or the GTA area is at least 6 to 8 times the transaction happened in Innisfield. That at least some report also show more than 10 times, So, so if the borrower, cannot pay for the mortgage and in the default, if the lender wants to do the power of sale of their property, the selling process will take long, or most likely will take longer than the party in the GTA. So that's the reason why they reduce the amount of the mortgage, or reduce the loan to value or the estimate value. So that is the same things right now the conventional bank like TD or BC are doing. They try to put themselves in a safe side. But anyway, the private lending actually is a very good tool for a lot of individuals, because if you cannot get a mortgage from the traditional bank, the private lending provides you alternatively a financing solution, right? So you can find more ways to hold your property for longer period if you don't want to sell it, or if you don't want to just sell the assignments, right? So you have more ways to to hold your property. Also, it gives you extra time, right, to sell your property or sell the property at a higher price. So that's the reason, right now the private lending market, the demand is so high, but the supply, the lender side, only lender do it because the money is fixed, right? But the borrower, keep increasing. The number of borrowers keep increasing. So many people, calling our brokerage or calling our senior agent said, I have a condo assignment is closing. 4 years ago or 5 years ago, the bank said they will give me 80% of the financing, 80% of the financing. And so I paid 20% of the down payment. However, right now my condo will close in next month. And they told me, right now, I only can give you 75%. And also, previously in 2020 or 2021, or even in 2019, the bank is willing to give at least 5.5 times than your gross income, or six times than your gross income, or even more, right? To get some mortgage. For example, at that time, bank is willing to give you 1 million, and that's the money you need to close your property, right? However, right now it's reduced to 4.5% or 4.5 times or 5 times than your gross income. So the loan amount is already reduced. And also some of the project, even the assignment purchase price is higher than the current market price. So the bank will not fill out that gap. Someone needs to pay for it. It's the purchaser pay for it. So if they still want the party, they want to close the deal, they don't want to lose their down payment, or they cannot find any person, to take care of these parties, what they can do is only find the second mortgage, or finds a private lender who is willing to give, a large loan amount to replace the first and second together, right? So that's the current market status. And I know most of our agents right now are level 1. Only few agents is level 2 agents. But I believe, when you have your clients, most of your client might ask you, or they will say, I have friends need second mortgage. Can you do it? Even you are with level 1 agent license, you always feel free to contact our brokerage or contact our senior agent. You can, negotiate with them, try to make the deal happen with them, not losing your client, right? So to do some preparation or learn some basic concept of the private lending is very important. At least when someone asks you, do you provide the private lending? You can tell them, I can't do it, but I know how to do it, and I can have someone or senior guy to help you to finalize the deal and, closing a property or refinance, right? So in that case, you can still earn the money. So that's almost about the private lending stuff. Is there anyone have any questions? If no, so later on, Kim will do the case study.
Sure. Hi, everyone. I just started for the case study 6 today. That is a situation for this one is the client not qualified for the bank side. Then they added for their uh, relative or someone have the enough income or added the guarantor or family member or something like that. Okay, so and then, okay. So first question is that the scenario is the Mr. and Mr. Smith are looking for the purchase 975,000. They are not qualified as a lender, so they need to add their daughter as a co-applicant. And then Mr. Smith is an employee of a convenience store manager for 6 years and 6 months. Mrs. Smith has been BFS of a spa and skincare store for 6 years. Their daughter has been an employee of the Flag City finance manager for 4 years. So I recommend when you using for the adding for someone like a cosigner, and then co-applicant or family member, or you can add your friend, or but when you have a strong income like the lawyer and doctor and dentist and architecture or good business owner, something like that. Okay, in this case, that the has they are purchased 975, and then he's 60 years old, and then his income 29,000, and Mrs. Smith is 59 years old, 16,000 around it, and credit report is 680 for husband, spouse is 630, and then daughter has 27 years old, salary is 130, 103,000, and credit score is 730, and down payment is 20%, is 195,000, and then single house in Toronto, this is the North Shore, property tax around 3,700, and then they have the RSP amount, TFSA, saving, and maybe daughter has a TFSA, a mutual fund, they have it, they deposit for saving, and the deposit for APS is $50,000. Their credit card balance, the $10,000, personal liable credit per month, 350, and current one is 400 per month. Current two is 300 per month. Okay. So first question: how much they need the down payment with the closing cost? So at least 20% of purchase, right? So that is 195,000. Okay. What do you think how much closing cost? Do you know someone know about it? How much percent? It's approximately 1.5 to 2%. Okay, but I didn't mention for the dollar. Okay, dollar has the first home buyer. Okay, so they using her credit, so probably 1.5% closing cost. So that is 1.5% is 1,400, 14,550. So total amount okay. Do you understand?
Uh, Hello, Sam.
Yeah, go ahead.
So normally all the other brokers, they have the calculator for this information. Don't we have a calculator?
No, most of the cost, the closing cost is the most to be their guideline for the TD or another lender. They have the product and policy should be the 1.5 to 2%. Okay, depends on first home buyer, they calculate 1.5%. So because when you closing cost, they include the lawyer fee and then they are moving payment, right? That include the two.
Oh, okay.
Yeah,
If
so
it's
that they don't have exactly amount they showing, just only approximately they charge the calculate 1.5%.
Mhm.
And then if you someone doesn't have the home first home buyer, they calculate 2%. Okay.
okay,
So
okay,
usually when you buying it, then you have the closing cost showing to the on the bank statement, same as their value qualification for the bank for 90 days, right? So you have to showing for the 1.5 or 2% showing the on the bank statement,
okay.
okay? Because they don't know about how much exactly about lawyer fee and then moving costs, right? Moving costs is all different, okay? Someone want to be doing but their own, or did someone hire for the moving company, something like that, right? But actually, bank calculate 1.5 or 2% of them. Okay, so you ask the client, is the first home buyer 1.5? If not, 2% you added it. Okay.
Okay.
All right. So
Hey,
next,
Sam,
yeah,
Sam,
go-
yeah, quick question. So do we need to include like the land transfer tax as part of the closing cost too, or no?
the
I
the
think that's
the
1.5 is included.
yeah,
That's
that
all the cost, right?
they have to
Uh,
include it too.
yeah, that's everything is included in that closing cost.
That's right. That's right. When you
Okay,
1.5, they include land transfer tax. Most to be 1%. 1.1 depends on the city, right? So most of the bank calculate 1%. So that 1.5 include land transfer tax.
okay,
Okay.
thanks.
Right. And then second one, with the federal government, the home buyer plan, how much you can using the maximum RSP.
So that's 35,000 if it's a first time buyer, right?
Yeah. So, the first home buyer, they maximum to buying two. Even their parents has a first home buyer, right? They buy first time. So what do you think? How much they gonna be using the maximum RSP?
35,000.
Okay, so each 35,000. Okay. So what about these people?
So yeah, they can do 1435.
Right. This they have the RSP, right?
Yeah.
So maximum they using, but if they have that if they have a $70,000, they can using the $70,000,
Mhm.
right? Because each
Yeah.
person using 35,000. Okay, even this case, because they have parents, daughter also have the, if we daughter has the RSP, right? We can use it for her daughter one too, right? So that is a single person using maximum 35,000.
So a question, if their daughter is a co-applicant, so that means she will be on the title. So all the applicants on the title, they can use the RSP or the main one or
They
the
using the
primary.
RSP, or even when you have a 4 applicant,
Yeah.
each has maybe less than 35,000, right? We can combine using it.
Oh, okay.
Okay, so each person maximum 35,000 for first home buyer, right? So this family has a first home buyer all, okay? So if you have that person each 35,000, 3 people, right?
Mhm.
So that is
One more,
$105,000 they put,
5,000.
right?
Okay,
Okay,
okay.
okay.
Hey,
So
Sam, so just to clarify, so say they have 3 applicants, right? If
yeah,
only one of them is first-time home buyer, so basically that means only that applicant can withdraw 35,000 from RSP or all 3 of them.
no, that if they separate it, even the family, this is the daughter doesn't have the RSP. Only parents have the RSP, right?
Mm-hmm.
If your daughter has 35,000, right? So we
Mhm.
can usually add this amount plus 35,000. So mean is 77,463 we can use it for the RSP.
So if their parents are not first-time home buyers, so are they
If you,
called?
if you the parents not first home buyer, just only we can using 35,000 for the daughter one.
Okay, okay.
Okay.
Thank you.
So when you first time home buyer, just only using 35,000 first home buyer.
So even the co-applicant is not like, for example, 2 people are buying, one is the second time buyer, one is the first time. But the person who is the first time buyer, he can use the RSP.
That's
Even the
right.
other
That's right.
person. Okay.
So in this case, if your parents has they already using for the RSP long time ago for the home or first home buyer, right? Then they bought move to the another house. Then they not using for the because the parents is not first home buyer. For example, they are second home buyer, like a second time buyer. Then just only using the daughter one, okay? So daughter has 35,000. Then you can use $35,000 for her.
Okay. Another question. I read when there's a spouse, right? If one of the spouses, second time buyer, the other spouse cannot use the RSP. Is that true or not?
Oh, you mean the spouser? Like I don't know how come that.
Like, for example, Mr. Smith, he is the first time buyer.
Right.
Mrs. Smith is second time buyer, right? So can they use both their RSP or not? Because I read somewhere when their spouse, if one of the spouses already bought a house, when they're gonna buy a second house, they cannot use the RSP, both of them.
No.
Oh, okay.
Technically no. But when Mr. Smith have a first home buyer, right?
Mhm.
Then he buy himself. Like they don't want to be a wife involved for the title, right? Then at that time, Mr. Smith have a using for the RSP. This is technically okay,
Right.
but he have to himself on the title, right?
Yeah.
Okay, that is okay. But when you have a sponsor, your sponsor usually already for the first home buyer,
Mhm.
right? Yeah, it cannot be using it.
No, not him. I'm talking about, so if it's a husband and wife, right? So husband already have a first house, but now wife is buying for her first house. So
No,
can she use the RSP while she's buying with the husband who already have a one house?
yeah, no. I mean, is when you have the spouse, they buy two. Previously they bought the one of the year using it, right?
No. So that's what I'm saying. Like, for example, they bought a one house, but the wife didn't use the RSP when she was buying a first house. Now the second house they're buying, can the wife, can she use RSP or no?
No, but
No, right.
yeah, if you separate it because in this case is no, but technically when they bought differently, like the first house just only husband buying it, okay?
Right.
Yeah, not on the title, but
Right.
when you second house buying from the Mrs. Smith, right?
Yeah.
Yeah, then her using for her RSP.
Okay, so she's the first time she's gonna be on title, so that will count as the first time, even the her husband is already have a house. Okay,
Right.
got it. Okay, cool.
So it's make it separated. If we want to be using for the RSP each time, right?
Okay,
Okay. And then so them is the total,
40,000 something.
yeah. Is
42,463.
So you understand what am I saying, right? So
Yep.
yeah. So when you using the RSP, so how long gonna be the money back? Like how much they're gonna be the $35,000 they bought, right? So how many years they gonna be money back to government?
I think 10 years. They start after the first year, right?
Yeah.
15 or 10? 15, I think.
I don't remember
15.
exactly. 15? Okay. Yeah, I know it start after the first year. Like they have 1 year to pay it off. Okay,
Yeah.
15 years. Okay.
Yeah, 15 years, okay? So don't forget, if we 15 years, they're gonna be got the penalty, okay? So
Okay.
you have to tell to the client. All right. So okay, the number 4. Okay. Which income document do we need? Mr. Smith. Now, always I talk to you about the salary. What do you need?
T4,
Employee.
employment letter.
Yeah.
There's no commission, so he's the cashier. Uh, yeah, employment letter, T4.
Employee letter.
Yeah, RSP letter. Sorry,
Pay,
RSP proof maybe.
pay stub.
Yeah, pay stub.
Before.
And the RSP investment letter from bank.
Yeah, if we they have the info, the investment, right? So
Yeah.
but I want to be just only basic, So employee letter, 2 recently pay stub. It's recently, right? Recent pay stub. Okay, and then T4. Sometimes he have a tip or or vacation, a bonus, whatever, right? So they have the 2-year tip form, okay? 2-year tip for 2 year. All right.
Yeah.
Okay. What about Mrs. Smith? She's
She's yeah, I think financial statements for her.
first T1 general, right? For 2 year.
Yeah.
So when you have the tip T1,
T5.
you have to show in the notice of assessment anyway for 2 year.
Yeah.
Okay, and then sometimes they have a corporation, but 2-year financial statement. Statement. Okay, and what else? Always the after income document, they need the register one. So sometimes master business license, right? If you corporation, I'll take in corporation. Okay, so think about it. When you hit the BFS, right? T1 generator, notice of assessment, okay? master business license is a sole proprietorship or partnership. But when you have the corporation, they need the financial statement, article corporation. Okay. So those T1 notice of assessment, master business license, all one together. Okay. When they corporation, we need the financial statement and article incorporation. Got it? It's simple. T1 general notice of assessment. Okay. This is all one always coming together. Okay, T1 general notice of assessment for 2 years. And then master business license showing the register for the partnership was sole proprietorship. Okay, if you client is corporation, we need the article corporation for register, and then finance, a 2-year finance statement for the company. Okay. And now, what about daughter? Daughter was the salary.
Yeah, same as Mr. Smith.
That's correct, right? Employment letter to listen pay stop. Keyboard. Okay. Right. Even if they have the investor, right, like the TFSA, right, or some of that, like the invest income, mostly bank or mutual fund, they have to showing yearly documents T5. Okay, so sometimes because the might be their daughter has the invest mutual fund, right? She has a 4,891. It's not much. Maybe she make maybe $20, maybe $30 per year. Okay, for the tip 5, right? So we can use it for the support the tip 5 if they have the invest a lot, right? But maybe 4,000 just only $20-$30 per year for the income. Okay. What about 5? Which lender do you prefer, A or B? And add what interest rate and the fixed or variable and term amortization. All right. So I recommend A because the total income is 29,000, 16,000 is 103,000, right? Then should be 8 because can you have to calculate it? Okay, 8 under. What is the interest rate? I prefer 8 because the client want to be TD client, so they don't know about what is interest rate or about, but they want to TD loyalty client, something like that, right? That's why client is easy to using for the payment, whatever, right? So the client asked me about, they doesn't care about the 0.2% for interest rate. So I just refer for the TD. But if you worry about interest rate, I should be recommend the RMG now. Okay, so maybe they want to be TD, but RMG or no I think it's B2B bank. Okay, those 3 is I recommended. Okay, and then the interest rate is should be TD. Okay, TD. Okay. So 5-year fix. Okay. 5-year fix year 5.6 or 5.72, right?
But that's 25 plus year, right? We are looking for 25
And this
years.
is the 30 year.
Oh, 30 years.
This is the 25 plus 25 year is a 30 year amortization. Less
Okay.
if you 25 going to this one, right?
Okay.
But I give it to the discount for that is the 5.62, this 5.62, but I just posting the same rate. Okay. So TD 5.62%. Okay, look at the RMG, okay? I'm going to RMG too. So RMG 5-year, they has sure 5-year. So if you get the 65 base point, 5.34. Okay, if you hire base point for our commission, is 85, is 5.44. Okay, so I just do best maybe at 65, so 5.34. Okay, 5.34. Okay, what about the B2B bank? Okay. Okay, look at the 5-year conventional, 5.79. Okay, 5.79. Maybe this is insured, auxiliary. It is uninsured conventional. That is a 5.79. Okay. Okay, that is a 5-year fixed. and do it here. Okay. Okay. So now GDS calculate. Okay, GDS. So on basic on the TD. What is the monthly payment? Is they want to be much mortgage amount. You can say the mortgage amount 20% down, so 975. Okay. 80%. So 780, right? 780. $780. Someone tell me the mortgage amount is 780. The interest is the 5.62. So how much payment? Someone. Okay, so 780. So 5.62. 30 year. Then X. Okay, so PD. PD. The payment is 4,455.86. Okay. Or RMG. RMG is 5.3, 5.34. 4,022 to 44. Okay, if B2B, 5.79. 4,537.69. Okay. So in this case, when you have the how much different is almost 0.3 different, and then here almost 0.4 is different, right? So TD pay 4,455, RMG 4,322, and then B2B 4,533. Almost, this is $100. This is $100. Okay, different. Okay, so should be I'm gonna be calculate RMG to that one. So the GDS, when using GDS, what's it calculate for? Right? Mortgage plus, okay, and then property tax plus heating cost. Okay. So mortgage is I'm gonna be using for RMG one. So $4,322.40 plus property tax how much year? $3,499.88.
That's plus 309. That's monthly cost.
Oh, right.
Yeah. So 309.15.
15?
15, yeah.
Okay, that's the monthly, right? So you have this is the monthly payment. So you have to calculate, this is the year. Okay, this is the year annual property tax bill. So we have to divide 12. Okay,
Yeah.
monthly heating cost is the 250. Okay, so 250. So, okay, Riley, did you calculate it? How much percent?
Just doing it. Okay, 4881
4,
881.59.
4, 8,
81
A1 dot
dot 59.
59. Okay.
Yeah.
So we have the two GDS, have two yearly income, right?
Yeah.
So we have to calculate monthly, right? So
All of them. Yeah.
income, right? So we have to, this is the monthly calculated. So the husband income is
29203.
9203 plus wife income is 16451 and plus
Okay.
daughter is
Okay, the total is 100,000 48 148 654
okay. So
148
48
654
6 5.
54.
Okay. So you have to calculate it 4,881.59 divides
Okay, it's 32%.
or 32%.
Yeah.
32%.
Yeah, 32.83, like whatever you like.
Okay, okay, so rounding 33%, right?
Yeah.
Yeah, the rounding up, okay, right, so 33% is qualified GDS, okay?
Mhm.
Okay, so TDS, everything GDS plus their card debt, that is all that, all that, okay? So we calculate for the amount for 4,881 plus this monthly column 400.
Mhm.
What about their credit card balance had $10,000?
So
How much?
3% of it, 3% of that.
That's correct. That's correct. So it's 30% of that. Okay, 30% of that.
Three,
Okay.
300.
So actually monthly 300. Okay.
Yeah, 300.
So calculate for that. Okay.
Mhm.
Yeah. So 300, and other one is okay, 300 line of credit is 350. Okay. So 650. Okay, showing that all. Okay, that is 300 plus 350 personal loan, and then what about the car? 400 and
Yeah.
okay.
Yeah.
400 plus 300. Okay, so plus this is
1350.
yeah.
481.
1350.
Equal to 16 to
Yeah, that's right.
31.
Yeah, that's right. Plus we calculated 4, 8, 1, 59.
Yeah. Equal to
And device same thing. Total 8, 6, 5, 4. Okay.
6.4. Okay, that's 41.92%. So 42%.
42%. Okay.
Yeah.
Okay. All right. Do you have any question? Go on to this one.
Now, I have only one question. So
Where?
when we do a calculation, I was told we do a stress test, right? So when they do a calculation, they actually add 1.5 or 2% into the interest to get before get qualified. So what
That's
is the stress test? Like how exactly that works here?
because this one is not working there, because this is actual I calculated, right?
Yeah,
For most we have the using the stress test for adding 2%. Okay,
right.
so for here, for okay, separated. Is the calculate is the that using for 5.34, right? So that should be 7.4.
Yeah.
Okay, I'm showing you about it. Okay, so what is the 7.438 qualified rate? Then monthly calculate
Let me see.
7.34. This a monthly payment is a monthly payment is a 5,310. Okay. Okay, so in this case, we gonna be adding for this amount to that, right? So I'm gonna be sure for this is. Oh no. Okay, so. Okay, so. 5,310. Okay. Plus heating cost 309. 15. Okay, just pass for the 15 cent, okay? Plus 250, right? Okay. So how much the 5,300?
309 plus 250 equal to 5869.
5869
Yeah,
divides
divided by
654.
it's 3948.
39,
48.
48,
Yeah.
yeah, percent. Okay,
Mhm.
it's around the 39%. Okay.
Yeah.
What about this is the GDS? Okay. 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 What about TDS?
TDS, let's calculate that.
So when you calculate added for the this month different, right? So 1,000, 1,350
Yeah, 5869 plus
plus
1350 divided by
531. Okay.
148654. Okay, that's 4856.
What? 48,
856.
56.
Yeah, 48 dot. Yeah, like 48 dot. No, I'm giving you the end result percentage.
Okay, just so that I just look at it.
Yeah,
It's 130 here. Okay.
yeah.
Then
You just type divide after 5310 divide.
6,000.
Uh,
6, 6. Right.
Okay, I have to do it again because I did give you the result. Okay, yeah, it's 660. Yeah, go ahead add that.
So what is the percentage?
It was 48. 1 second.
48.
40. Sorry, 1 second. 6660 divided by 148654. No, 4480. Sorry.
4480.
Yeah,
Okay, percent.
44. 44,
40,
44,
44,
80.
48, okay?
Yeah.
Okay. Usually, in the high ratio, Ghana is 39%, okay, GDS, and 44 TDS. That exactly amount to the guideline for that less than. But conventional, we negotiable. So usually it's okay to 40 to 50 sometimes, right? If you strong deal like this person, right? So probably GDS is 39, right? So we can negotiate on the rider. Should be exception because this is 0.4, almost 0.5 higher than their guideline, right?
Yeah.
But they gonna be exception for them. Just only conventional, right? If we
Okay.
high ratio this got to this point,
Mhm.
it's a decline, okay?
Oh, okay.
Only
So then we,
conventional up to 40%.
okay,
Okay, TDS 50%.
okay.
Okay, so 40 and 50 is negotiable. All right.
Okay.
Okay. Do you have any question?
No. Okay.
No. Okay. So I'm gonna be posting this. So I forget for the last answer for posting for the the case study speed. So I'm gonna be posting to today 5th and 6th answer for it. All right. So
Okay.
let's hope that they have a nice day, and then hopefully you doing well. All right.
Okay. Cool.
Okay.
Thank
Thank
you
you.
very much, Sam.
Bye-bye.
Have a good one.